Greetings, my name is ChayLee Ridge. Chances are you're watching this video because you have shown interest in our company for your mortgage-related financing needs. And chances are that those needs have to do with real estate investing. I wanted to take a minute and personally welcome you and give you a quick update on who we are as a company, myself included, and that 30,000 foot view, some background about us so that when we do connect, which I believe is imminent, that we will be spending our time really focusing on what's important, your goals, the strategy that you want to impose, expectations being set. Chances are some of you are going to want to talk about interest rate, really making sure that our time together in this first call is as high level as possible. So I want to take a few minutes and give you some background, which I think will add value to our discussion. So here we go. Ridge Lending Group, we are a multi-generational company that among many things, we do have a particular focus for real estate investors. We are licensed nationwide, so we have a very extensive footprint. There's only 4 states that we are not currently licensed in. Those are Alaska, North Dakota, New York, and Vermont. Otherwise, we will be everywhere that you're looking to buy or sell, refinance, 1031 exchange, etc. I have been in the space and working largely with investors for about 25 years. What I think might be unique, or what I'm told is rather unique about me personally, is that I am a fellow real estate investor. I've held many, many properties all over the United States. So I think that for a lot of people, or I hope it adds some credibility to us as a company in that I have worn and wear both hats, being able to see it from both lenses. A lender that looks at and focuses on investor needs, and being a real estate investor maybe adds that credibility, or we hope so. We are not a one-size-fits-all. We have a very diverse menu, if you will, of loan programs, much of which is catered for real estate investors, but not everything. I should quickly comment, we're full service, VA, FHA, owner-occupied second home, everything and anything, but we do have a reputation for that investor space. We have 4 basic prongs of product. I'll quickly review those, go over those, and when we speak, we can do a deep dive into one or any of them. You'll have to let me know. So first is what we call agency, aka Fannie Freddie, aka golden tickets. If you've heard me speak before on a podcast, you probably heard that term. We call them these because Fannie Freddie will deliver the highest leverage at the lowest interest rate literally on the planet. So golden ticket is appropriate. There are 10 of these per qualified individual. Non-QM loans, I'll define what QM means when we speak. In and of itself, non-QM is very diverse. It's not actually just for investors. It's for anybody that doesn't necessarily fit into the more conforming or conventional loan boxes. We have short-term bridge money for those of you that are looking for maybe a fix and flip. Perhaps you've got some renovation or rehab that you need to do and you want to leverage some of that capital. Bridge loans would be for you. We have debt service coverage ratio products, which are specifically or exclusively about the property's rent and the payment that the mortgage will create, having nothing to do with your individual debt to income ratio. And then finally, we have commercial loan products, which obviously would apply to commercial properties on a housing basis. That means 5 doors and above. But commercial can also be used for residential properties in what's called cross-collateralization. So those are just the basics, gang. Any and all of those that you want to touch on, just let me know and we will peel back the layers and get into that. I think I want to finish this video by sharing what I believe to be our most profound value add, and that is the education that we're known for. I think I mentioned earlier that the learning curve in investing is pretty tough. The mortgage side of it is like a whole new language. And especially for those of you that are new to this world of real estate investing, you're going to find that, the finance is like turning a battleship in a creek, as my father used to say, right? That's the visual that I'll leave you with there. And what you don't know about the financing can hurt you. The information is not readily available on the internet. You can't Dr. Google this. You really need to have somebody that eats and breathes and lives and sleeps this stuff. So the education that we provide for our clients really is personal, and it has to do with their current qualifications, certainly what their short and long-term goals are. But more than that, we take it as a holistic approach, all of that information, and what we're really wanting to impart to our clients is helping them understand how to optimize their basic qualifications, their debt to income ratio, their credit score, their assets, right? Those things are going to change. We are real estate investors. We're not going to buy one piece of property. We're not going to refinance one investment property. We'll constantly be doing this. So as a result, your qualifications are a fluid thing. They're going to change as you acquire more or as you evolve as an investor. So clearly, the qualifications will move as you evolve. It's important to have a look under the hood. Get an inside track on the underwriting guidelines, the definition of those guidelines as they apply to you, and again, your qualifications, layering in your goals, and then really teaching you how to optimize those qualifications from an underwriting perspective. As an example, a big one would be understanding how to read a Schedule E once you start having real estate properties on there. Because one of the greatest things about real estate investing is going to be the tax deduction that you get to take ultimately, right? But the more aggressive we are over here on the Schedule E and tax deduction, the more it might possibly impact on the qualification side and the debt to income ratio. So there's a nice balancing act here, and our job is going to be to help prepare you, to help arm you, to help inform you, and make sure that on a long-term basis, you are securing the best rates and terms your qualifications can afford you. Okay, I think that's probably good. I cannot wait to talk to you and do the deep dives on all of this stuff. Please keep in mind anything that I've said that triggered other questions. I look forward to answering those and many, many more. Thank you for listening, and we'll talk to you soon.